We have a quick question here from a new subscriber asking why risk assets have been so choppy this week. Saying we've had strong moves lower and strong moves higher, and it's really difficult for them to keep track of the current market environment, and they feel a little bit out of their depth. So I want to thank you for the question. And the first thing I'll say is don't feel worried if you're a bit taken aback by some of the recent moves we've seen in markets. These aren't regular trading environments by any means that we're trading in. And even the smartest and PhD analysts and traders and economists out there have recently been scratching their heads with some of the moves that we've been seeing. So it's normal to feel this way, especially if you haven't been exposed to these types of moves before. And I just quickly want to run through an idea, that is often overlooked, and that is very important to really keep track of these types of moves and knowing when something will have a much bigger impact in the market compared to not. And that is by always keeping track of the key macro drivers that we have in the market. So no matter where we are, in the business cycle, no matter where we are in terms of monetary policy, those things are very, very important. We always need to keep track of them, but we always need to keep track of the main or key macro drivers that the markets are focusing on at any given time. And you can basically classify them into two groups. You have your primary drivers and then you have your secondary drivers. Now, the primary drivers are those macro themes that are the most pressing for the markets at any given time. So, for example, if you think back to 2016, what was the main primary drivers that the markets were focused on back in 2016? There was two things. It was first the Brexit referendum for June 2016, and then it was November's 2016 US elections where President Trump won the election. If we look at something like 2018, we know the main driver in 2018 was, of course, the trade war between the US and China. In 2019, trade war also surfaced quite a lot, and it also shared some primary focus there with, again, Brexit and the withdrawal agreement. And we also had the UK general election as well. Fast forward that to 2020, we know that the primary driver right now is COVID-19. And in terms of secondary drivers, the secondary drivers, they are the underlying themes that are present in the market, but they might be taking a back seat or they might be in limbo waiting for significant new developments. Now, in our current context here in July 2020, the underlying or secondary themes we have running right now is, of course, the tension between China and the West due to the recent Hong Kong legislation. We also have Brexit in the background with the negotiations going on because the transition period is at the end of this year. And we also have the ongoing discussions with regards to the EU Recovery Fund, the proposal. So the secondary drivers are things that they're still important to the markets, but they might not be front of mind every day due to the primary drivers basically taking all the shine. And the price action, in something like the S&P 500 over the last 2 days just really gives us a great, clear, recent example of why focusing on the primary drivers are so important from an intraday trading perspective. So, looking at the chart, we can see here on Monday, we had a very strong sell-off in risk assets and a very strong risk-off tone when we heard that the governor of California reinstated lockdown restrictions and ordered certain businesses to close down. Now, due to the virus being one of the primary drivers right now, we saw a very strong market reaction from it. Just a clean drop to the downside in that trading session. Now, looking just 2 days later, literally just 2 days later, where we are today on Wednesday, we have the entire reversal of that entire move to the downside when we had some promising news again about the virus, about a vaccine from the Moderna company that showed promising results in a safety test they did. And after that news, we had that very strong rally. We had a small pullback, and we've basically been rallying for the entire day based on that risk on sentiment, based on that positive news, because it's something that the markets are focusing on right now. It's that primary driver of the virus, and that's causing these big, fast moves in the markets that we can take advantage of. So, it's just one more good example of why we always need to make sure that we using our energy and our time wisely when we trade and when we analyze the markets, by placing more focus and more attention on those things that the markets are focused on right now, on those primary and those secondary drivers in the market that we know is going to be market moving. And this will help you to make better sense of these types of big moves in the market, and will help you to guide your understanding when certain news happen, when it will have a bigger or smaller impact in the market, depending on what the markets are focusing on at that time in terms of those primary and secondary drivers.